Hey friends, welcome back to the channel. Thinking about refinancing your mortgage? Sometimes it makes perfect sense. And other times, it's like fixing a leaky faucet by tearing out your entire kitchen. Maybe not worth it. So today, I'm gonna give you the top 6 times refinancing is an absolute no-brainer. First one's obvious. If you can drop your interest rate and the savings cover the cost of refinancing in under 2 years, that's usually a green light. For example, if it cost you $5 grand to refinance, but you're saving $300 a month, your break even is about 17 months. After that, pure savings in your pocket. No brainer. Number 2, killing PMI. If you bought with less than 20% down and you're stuck paying that extra monthly insurance, refinancing can wipe that out. Of course, we need the value to support it, but it's definitely worth looking at. Bonus tip. If you bought with an FHA loan, PMI never drops off. And refinancing into a conventional loan, once you've got enough equity, can accomplish the same thing. Even if your rate doesn't drop much, ditching that PMI can mean hundreds of savings every single month. Third reason, pulling cash out for home improvements that actually add value. Think kitchen remodel, adding a bathroom, finishing a basement, not the man cave, the home theater, or the neon sign collection. These can cost you more than they're worth. No judgment. Point is, if you can increase your home's value and quality of life, a cash out refinance can be a smart move. Fourth reason, consolidating high interest debt. If you're carrying credit card balances at 15-20%, rolling that into a mortgage and spreading it out over 30 years can be a lifesaver. Just remember, you're moving short-term debt into a long-term loan, so only do it if you've got a plan not to rack up that credit card again. And finally, shortening your loan term. If you're in a 30-year loan but can comfortably swing a 15-year payment, refinancing can save you tens of thousands in interest and get your house paid off way faster. Not only do you usually get a lower interest rate on a shorter loan, but you pay way less interest over the life of the loan. Talking tens of thousands of dollars, sometimes even hundreds of thousands of dollars, depending on your balance. Reason number 6, and here's a bonus one just for my fellow veterans, the VA IRRRL, or what we call the interest rate reduction refinance loan. It's fully streamlined. This is one of the easiest refinances out there because there's no appraisal, no income verification, and it's designed just to drop your rate or payment. Now here's where it becomes a total no-brainer. The rate is low enough and the lender credits cover all the costs, you can literally refinance without adding any costs to your loan amount. That means you're lowering your payment, saving money every month, and the closing costs were all covered by nature of the new market rate. It doesn't always play out like this, but when it does, there's no reason not to. So those are the 6 big green lights. Quick break even, dropping the PMI, funding smart renovations, consolidating debt, shortening your loan term, and lastly, a streamline covered by the lender. If you're in one of those situations, refinancing can be a total game changer. If not, it could still make sense for your situation, but it takes some strategy and a second look. Of course, if you want me to run the numbers for your exact situation, please reach out. I'll tell you in plain English if it makes sense or not. It shouldn't be a guessing game. We'll talk it over and review the pros and cons of each. As always, if you like this video, I'd be so grateful if you give me a quick like and subscribe to my channel. I promise to keep putting out useful mortgage content and tips to help you on your home buying journey. I'll see you on the next video.